I'm Jeremy Hobson. This is the follow-up from the middle, where we follow up and bring more of your voices into the conversation on a new topic each week. And today we are following up on our show about the war with Iran, focusing on how it is affecting people here in the United States. And many of you talked about the economic strain you're feeling. So we brought in someone who has been looking at the economic side from all angles. That is Aimee Picchi, who is Associate Managing Editor for CBS MoneyWatch, where she covers business and personal finance. Aimee, welcome.
Thanks for having me on.
Well, and first of all, just big picture, what are you seeing economically when it comes to the effects of the Iran war?
Yeah, I mean, the most immediate impact, everybody knows oil and gas. I mean, you go to the gas pump, you're just seeing those prices. Today, actually, gas hit the highest price since the Iran war started. It hit, I think it's 4.18 a gallon. So it's up $1.20 a gallon since the war started. And that does make a big impact on people's finances. But there are also other ways that it's making an impact. There's, higher airfares. Baggage fees have increased. Airlines are saying,
Right.
we need to charge more for baggage fees because fuel costs so much more. And mortgage rates have gone up. So there was some relief on that side before the war started, and people were starting to come back into the housing market. And then they went up after the war started because of economic worries and some other issues. And so that's also priced some people out of the market again and made people hold off on buying homes just as that spring home buying season is starting up. So those are the most immediate impacts that we've seen.
Wait, can you just connect the dots there for me on the mortgage rates? Why would the war in Iran send mortgage rates higher?
I know it's complicated because people might think, oh, well, mortgage rates are tied to the Federal Reserve's rates, and the Federal Reserve has kept rates steady. They last cut in December, but actually, mortgage rates are influenced really by the economy. So if they're in the 10-year Treasury bill, so if investors think, oh, the economy is going to worsen, inflation is going to go up, that tends to send mortgage prices up. I know it might not seem like it makes a lot of sense, but that's kind of how the mortgage market works.
Well, and especially because we remember in COVID when we had an economic catastrophe that the mortgage rates went way down. And so many people were able to get amazing mortgage rates that they're still living with today. One of our guests on the middle on the live show, Isaac Saul of Tangle News, says he's expecting a prolonged energy crisis. What does your reporting tell you?
Yeah, I mean, we talk to economists all the time about this. First of all, it's just really hard to say, like, how long is this war going to last? When it does end, how soon will things kind of go back to normal in terms of shipping and that flow of oil? But economists do say, regardless, we need to brace ourselves for higher oil and gas prices through the end of 2026. I was looking at Goldman Sachs. They're forecasting a barrel of Brent crude, which is the international benchmark, will be at $80 a barrel by the end of the year. That's still higher than before the war. It was
Right.
about $70 a barrel before the war. So um, even if it ends soon, oil prices, gas prices are going to remain elevated. And that trickles through so many different things in the economy. So yeah, from there, it's not just at the pump. We're going to see economists say you're going to see food prices start to rise in the summer because those
Right.
transportation costs of shipping those strawberries from a farm in California, that's going to trickle through to those grocery prices. So it's kind of going to just pile on throughout the summer.
Yeah.
We'll see what happens. It really depends on how long it lasts.
Well, and to that point, listen to this call we got.
My name is Jared Judd. I live in American Fork, Utah, and I would love for this war to be over because fuel is becoming more scarce, and I think it's affecting the American people terribly. The price of gasoline to get around has gone up so terribly, and it's making it harder and harder to make ends meet with higher cost of living, higher food prices, higher everything. Things that used to be $1.50 are now $1.80, and that's a high difference in price just for one item. Everything has gone up. I see people at the supermarket that can't pay for what they're hoping to buy. It all adds up much more quickly than before, and people are going without a lot of things that they used to be able to buy on a regular basis, me included.
Aimee, you mentioned food items, but some of these things were getting more expensive before the war because of the tariffs. Is it easy to tell what the war is doing to like things that you buy at the supermarket?
You can see some of it, but there are a lot of other issues going on. I mean, I'd say right now we really haven't seen the impact of the war and the oil prices on food yet. But I think one thing I want to point out that your caller mentioned is that these issues, the cost of living issue, was very painful for Americans even before the war started, right? I mean, that's a lot of why people believe Trump won in the election in 2024 is because people were
Mm-hmm.
frustrated with inflation, the cost of living, and he vowed to bring that down. So people are already feeling that before the war. Inflation had been coming down slightly, but if you look at the inflation data, we've had basically 5 years, for 4 or 5 years of inflation being above the Fed's 2% goal. And it hadn't come down to 2% even before the war. So you're laying on like kind of years of pain about the cost of living,
Yeah.
yeah, on top of this now, this rise in the gas prices. But right now, if you look at the inflation data, kind of what's you can see most directly from the Iran war is fuel, energy, airfares. That's kind of where you're seeing the immediate price
Well, and I would
impact.
say that one of the themes that we've gotten from callers for many, many months is about cost of living. And I also think that the fact that our show, The Middle, airs on hundreds of public radio stations across the country where people don't have to pay a subscription to listen to that means that we hear from people of all income levels, and a lot of people at the lower end, especially when, like our caller says, something goes from $1.50 to $1.80, it makes a big difference for that person.
Absolutely. Yeah, people on the lower end don't have that flexibility in their budgets to afford that extra, $1.20 per gallon. And we talked with a Stanford University economist who said over the last 2 months, Americans have spent $150 more on gas on average than if
Mm.
the price had stayed where it was. She's predicting that by the end of the year, it'll be $800 more in gas. And, for someone with a really tight budget, that's something, you've got to figure out where is $800 going to come from,
Right.
and that can lead to really painful decisions.
All right, let's listen to another caller who had an interesting take. Here it is.
This is Tom in St. Louis. I think we should be starting every conversation about the war in Iran with the human cost. We saw the U.S. service members who died and all the ordinary civilians who've died in this already and who will continue to die. When government experts and journalists and analysts talk about this conflict in terms of, the effect on the prices and the world economy and oil supply, without first considering the lives of ordinary people caught up in this, I think we're all acting a little bit sociopathic, and we need to confront that.
A valid point, Aimee, although I'd say when people can't afford their food or their medicine or they lose their job, that's a human cost as well. But what do you think when you hear that as somebody who covers business and economics?
I mean, it's interesting because, yeah, it's something we don't really talk about in our coverage. But I think that speaks to the Trump administration's actually their bigger argument that, this war is going to provide some safety and assurances, and that paying the higher cost of fuel will make it worth it in the long run. But, in the meantime, I think a lot of people just, consumers, Americans are just kind of scratching their heads and can't really figure this out and trying to like, to they're trying to figure out how do I just make my budget work this month. And I think sometimes it's hard to look at that bigger picture when you're feeling like, oh, am I going to be able to make my monthly, minimum payment on my credit card? And, that gets very stressful.
How likely, by the way, according to the people you're speaking with, is a recession at this point?
Yeah, so that's interesting because definitely the recession odds are going up, but there's still, it's less likely that there'll be a recession than not. You know, we were talking to economists last week about this. They're ratcheting down their GDP forecast for 2026. So, like one economist we spoke to says now GDP growth of 1.8% this year in 2026. That's down from 2.1% last year. That's not a recession. I mean, it's not great. It's not like a boom, but I mean, the
Mm-hmm.
economy's still growing. It's just that when you're, an American and you're feeling like the job market's not great, there you see layoffs happening all the time, you're not feeling secure, you're having a hard time with your budget. It might feel like the country's in a recession, although technically, we're not in a recession, but, things can feel very differently. It's funny when you write about economics, because you talk to the economists and they say, no, the economy is actually okay. And you talk to regular people and they're saying, the economy's not okay. It's not great. We're not doing okay. And,
Right.
I need a change.
I love it when the economists say that they think there's a 50% chance of a recession. I'm like, oh, thanks, Sherlock. I could have
Yeah.
told you that,
Yeah.
and I didn't
I'm
even
not
see
seeing
right.
it. I know I'm not seeing it quite that high. I'm seeing maybe even 40%, but that's higher than it
Right,
was. So,
right,
you
right.
don't want to see it creeping up. That's for sure.
All right, just stand by. A reminder to follow us on Spotify or wherever you get your podcast if you haven't already. We have more with CBS Money Watch's Aimee Picchi on the follow up. Welcome back to the follow up. I'm Jeremy Hobson. I'm joined by Aimee Picchi, who is Associate Managing Editor for CBS MoneyWatch. And let's talk about the cost, because taxpayers are going to be on the hook to pay for this war. There's some estimates. It's costing $2 billion a day for this war to go on. For example, the Tomahawk missiles, the Patriot missiles, those are millions of dollars each every time they get shot somewhere. What do we know at this point about the cost of the war and how it will be paid for?
I think right now that's in flux. I know, right, we know that the Trump administration is going to be asking for money for the war, but I think that's TBD at this point. However, we do know that the financial situation for the US is not great. I mean, we've just been adding debt on. We just hit the 39 trillion mark for national debt. And, a lot of this has just been piled on through COVID, of course. The stimulus bills added a lot of debt, and all the tax cuts as well. The One Big Beautiful Bill is adding a lot of debt as well. And that means that we have to finance that debt. And as a result, the US is spending more and more every year on paying interest on treasury
Mm-hmm.
bills to finance that debt. That's coming out of taxpayers' pockets. There are a lot of economists out there, public policy outfits that say, look, there's going to be a reckoning at some point. The war is definitely going to add to that and add to that debt. We just don't know really how much at this point, but it's something that some economists are very worried about. It's maybe not an immediate concern, but this, at some point the bill comes due and you have to pay.
Well, and the debt has been the reason for the Trump administration saying that they can't afford to pay for a lot of things in the government. Listen to this caller who got to that point.
This is Brian from Keene, New Hampshire. The war is one thing. Getting rid of nuclear weapons, I support. However, when we have to go pay for it and then pay more for everything else and then witness our whole social system being destroyed so we can pay for it, that's a different story. We should not be paying for it with our Medicare money, our Social Security money, at the gas pump, and everything else. This is not World War II. The sacrifices that we make are going right to the pockets of those in charge.
A couple of points there, Aimee, but let's just talk about the fact that, I mean, he brings up Social Security and Medicare. We remember it was just a few months ago that the Republicans said that they needed to get rid of the subsidies for Obamacare because they couldn't afford them. Of course, all the DOGE cuts that happened in the first year of the Trump administration in the name of reducing the deficit. Is there any pushback on the cost of the war coming from the fiscal hawks?
Um, I am hearing this more, yeah, from everyday Americans. I think that
Mm-hmm.
they're very aware of this issue. Um, I think at this point, it's just because it's still so unclear how long this war is going to last and how much it's going to cost. I think it's to be determined what happens on that side. But Americans are very aware of this. They're very aware that, hey, we were told the US can afford these enhanced premium tax subsidies for millions of Americans on the Affordable Care Act. And we know as a result, there have been millions of people who have dropped their insurance this year. And now the US is turning around, the federal government's turning around and saying, oh, we need to spend so much on this war.
Right.
And, that is getting people upset and wondering, well, wait, where are my tax dollars going? We'll see. I mean, I think a lot depends on how long the war lasts. At this point, it does seem to be a little bit in a hiatus, and it's really unclear what's going to happen. But the Trump administration is saying that they keep saying it'll end soon. Prices will go down. When we reach out to them about gas prices, they say they'll come down soon. So I think, at this point it's so up in the air, it's really hard to say, but Americans don't like to see their social safety nets, their benefits being taken away and saying the US can't afford this and then seeing that money being spent in their eyes, it seems like it's being spent elsewhere.
Aimee, for our listeners and viewers, is this a moment when ordinary Americans should be thinking about maybe I don't buy that home right now or take on that debt? Is this a moment when people should be rethinking big financial decisions because of the uncertainty, or do we just live in an uncertain world and you kind of have to just do your thing?
We know already this is happening. I mean, there are surveys, there's increasing evidence that Americans actually are starting to do this, and this is a real economic worry. Of course, it's a concern for personally for people who have to say, I can't do this right now, I can't afford this right now, but 70 cents of every dollar of GDP is consumer spending. So when Americans say, I don't have the money to, buy a new car, I don't have the money to do that home renovation, that just trickles through the economy and hurts the economy. A weak consumer means a weak economy. So that is a real concern. But it's happening. We're seeing this. There was a study from Primerica of middle income consumers that found that 2/3 of them have delayed a major purchase or expense in recent weeks and months because they have to meet these short-term financial needs, filling up their car, paying their home heating bill. They're putting up things like home repairs, but also I think this was very concerning. They're delaying medical expenses that aren't emergencies, but these are things like dental procedures that they're putting off. And, that's a concern because, maybe it's not an emergency, but it's important to, get that cavity filled to take care of your
Yes.
health when you need it. And they're putting these things off. So that's concerning on a personal level, but also for the economy and a wider basis. It is concerning for the economy.
When I first got out of college, I was moving around a lot as a producer with NPR and didn't get a dentist for a few years. And then when I finally did go get a dentist, I had a few cavities and I had to get an emergency root canal. And I
Oh my God.
never made that mistake again. Now you go to the dentist every 6 months for that cleaning.
Right.
So don't put that off.
Don't put it off. It's also hard because a lot of people don't have dental insurance, or if you do, it only covers a fraction of a procedure. So that's a whole other issue. But yeah, but it is concerning to see these trends. So this is happening already. The question is if the war ends, if, things kind of get back to settle down a little bit, will people then start like resuming like, okay, I'm feeling more confident. I feel like I can do this. I can buy that car. I can do that dental procedure and feel okay.
Well, and I will say there does seem to be an amazing amount of resilience among the American consumers, despite everything that's going on. You talk about some of the numbers are getting worse, but in general, people are still out buying things.
Well, I think a lot of
Or am I
this
wrong?
is well, it's interesting because if you look under the hood, a lot of this is the K-shaped economy. So this is the idea that there are two trends happening in the economy. You've got the upper income consumers who are spending and they keep spending. And so that's the upward arm of the K. And Moody's had an analysis last year that found, I think, like the top, it was 5 or 10% of US households by income contribute 50% of all consumer spending. It was a record. So they're still spending, they're opening their wallets, their wages are going up, but the bottom 50% are not doing as well. And that's where you're seeing the pain. But that's the middle class, that's the lower income households, and they're important to the economy. You kind of, it's not great if you have some people doing really well, but a lot of the US households are
Right.
struggling.
All right. Everybody who comes on the follow up gets to make a prediction. Aimee, what is yours?
Um, I think that we will end up getting through this year. I think that gas prices will go down. Not to the levels where they were, but I think that things will settle down and we will get back on track. But I think that all those bigger tax refunds people got are going to be gobbled up by gas prices, and I think the first half of the year is going to be kind of tough for the economy. But I think things will get better in the second half.
That is Aimee Picchi, who is Associate Managing Editor for CBS MoneyWatch. Aimee, thank you so much.
Thanks, Jeremy. It's great being on your show.
And thank you for joining us on The Follow-Up. It was produced by Harrison Patino. If you like it, follow us for new episodes each week and share it with a friend. I'm Jeremy Hobson. I will talk to you soon.